Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the US CPI numbers have come and gone, slightly weaker than expected. We saw a big dip in the dollar, but then it retraced back once we had the FOMC, and they came out and said they're projecting only one rate cut this year. But this is a good thing, right? We've got weakness in the CPI numbers. The Feds adjusted their sort of forward guidance to that. And now, if we get weaker numbers, that will change, and that gives us trading opportunities, right? So that's the most important aspect at this point, is really understanding, what happens with the numbers. Now, if I just scroll back up here and show you the numbers, not much of a difference, right? If anything, the month-on-month numbers came in slightly weaker. The year-on-year 3.3%, right? And the forecast was only 3.4. So we're seeing some decent clean outs of stale long positions, long dollar positions in the market. All right, now just looking at the hourly charts here, as you can see, the impact of the weaker numbers, we saw the dollar index fall, euro sort of rally, and outside of the markets being a little bit stale at times, they are respecting the trend lines extremely well. Like sterling snapped up through there, came back down, tested, now he's back below that. You've got the Aussie doing the same, Kiwi, dollar CAD, dollar yen, and dollar Swiss was sort of in limbo, and the dollar index, right? So once again, this sort of like reaffirms and should give you confidence in the technical analysis that we teach you, because this is it in play. But the CPI numbers have made a bit of a basket case of the current technical setup, right? It's a little bit bashed up, if anything, as you can see by these trend lines. If I look at the daily levels, okay, well, actually, let me get on the daily chart. Might do us a bit of a favor. Okay, so you can sort of start to see here the dollar index still within recent ranges. I still think there's a big chance for the dollar to fall here. And it sort of comes in today's numbers, which I'll cover here in a second. Dollar Swiss has already sort of broken down. Dollar yen just doing its own thing. Dollar CAD just in the middle of the range, as is euro. We had that another clean out here in sterling. Sterling really wants to go up, right? So I'm going to be watching that very closely. It's reacting a lot better to weaker US numbers than some of the other pairs. The Aussie sort of tweaking around there, as is the Kiwi. Now, no big changes here. I think the dollar is due for a bit of a clean out. And this is where I come back to really piecing it together. This is the power of weak numbers, right? We get the weak US CPI. It puts that weakness in the frame or in the mindset of most traders and fund managers. And we've got some things to work with now, like tangible direction. We just need to build on it. Now, first of all, we have the Aussie employment numbers today. Now, don't get overexcited about the employment numbers. Like globally, we are seeing improvements in employment, especially the employment change. Times are tough. Everyone's jumping in, trying to get as many jobs as they can to pay their housing bills, their living costs, everything else, right? To try and keep things afloat. So strong numbers here. I don't think it really necessarily equates to a stronger Aussie, but weaker numbers, I tell you what, they do, right? So if anything, weaker numbers here, you're looking for a weaker employment change. I'd say below minus 10,000, and you really want that unemployment rate blowing out above 4.3%. You're going to see a move on the downside there in the Aussie. That to me is tangible. Stronger numbers doesn't really do anything for me. Now, you come into the North American session here. We do have the initial jobless claims numbers. You got some PPI numbers here as well. So just keep an eye on that as we go through that North American session. It's an excellent time to be getting weaker numbers on the back of the CPI, right? This is what we need from the markets. We need them to give us continuous data the same way. And if we get that, well, I can tell you by the time it comes around to the next FOMC meeting, they'll be talking a different tone, not just one rate cut, maybe a couple as we run into the end of the year. And that's where the trading opportunities are going to be. So the US numbers at this point should be active. Now, these are, I know the PPI is an inflation number, but it's not like obviously the CPI. So just be aware of that. And the jobless claims number is traditionally like a third tier number at best, but it can come in and have some sort of impact. If we see a blowout there and weaker PPI numbers, we're going to see a fall in the US dollar. And that sort of plays into the hands of a lot of these instruments, right? So that's where my focus is today. Weaker Aussie numbers for sure. Definitely worth focusing on that. Keep an eye on the minimum maximum range and then let that flow into the dollar, right? I still think it's early days after the FOMC, but the writing is on the wall, right? Now the market is a little bit confused. You know what, the US Treasuries, a little like the short dated stuff for 2 years, the yields are up, but the long dated stuff, it's slightly lower, right? So, you know, the market's not 100% sure yet what the dollar's doing, but that's where the next couple of sessions and the next round of numbers will come into play. We're seeing like the NASDAQ sort of up. We're seeing the Dow Jones slightly down, bit of a mixed reaction, and that is being expressed across the majors. There's no clear sentiment here with risk on, risk off. One thing I have noticed, and this comes in with the Aussie data, is the Aussie's sort of falling against most things, right? So that works with weaker employment numbers, which is out in about 40 minutes. So check that out. Outside of that, just see what's going on in the North American session. And most importantly, keep an eye on the equity markets, okay, and the bond markets, because that's where we're going to probably see dollar direction. And we should see that translate into the currencies and also the commodities. The commodities taking a bit of a pounding here at the moment. All right, guys. So if you missed that trading opportunity, and I was sort of looking for stronger numbers, so I didn't get any of it, but just understand this changes the game and invigorates the market. So from this point on for the next month, I think we're going to see more active markets now that the US CPI numbers are moving, and they're moving in the right direction towards that 3% top of the band for the Fed, right? Weaker numbers from here gets the Fed rolling, gets interest rates cutting as we move into the end of the year in the US. And that's going to create a huge amount of opportunities across the equity indices, the currencies, across the board, right? It's very exciting. All right, guys, have a good one. All the best. Cheerio.